The word inflation was mentioned 13 times last month. It's been mentioned 11 times in the most recent RBA statement. So read into that what you will. I like to look through the statement and just do keyword searches to get a better sense of what they're actually talking about, what's gained a reference, what's lost a reference. But on this issue of inflation, still holding at around 5.2% down under, the RBA is still behind the curve. What's going to determine the next rate increase, in your view?
I think the RBA is taking a pretty hawkish stance, at least in the short term, and that they will be quite aggressive because they want to get on top of inflation. And what they've been talking about recently in their statements is inflation psychology, or it's just a fancy way of saying inflation expectations. They don't want inflation expectations to get out of hand or to get entrenched at a much higher level. I think they've seen what's happened in the US, where inflation expectations for the longer end have increased, and they don't want to be in a situation where they need to increase rates to slow the economy, but inflation expectations still remain high. And then you risk the situation of a wage price spiral emerging or inflation remaining extremely strong. Now, I don't think that that's likely because I think that a lot of the risks around inflation have actually peaked. We're seeing lower commodity prices. Some of the supply chain pressures due to the pandemic have started to ease. Australia is unique in its current situation with fresh fruit and vegetables because of the flooding, but that's only a temporary factor as well. I don't think inflation is going to get out of control here. So while the RBA wants to be aggressive in the short term, I don't think that they'll need to be as aggressive next year, which is why we don't see the cash rate peaking at over 2.5%.
Okay, over 2.5%. Diana, just quick reaction to what we're seeing on the Australian dollar as well, which has been erasing gains down, in fact, about 0.2% after the RBA decision. Is that just traders taking profits here or other factors at play?
It could be that traders are seeing that the statement's a little bit more dovish than what they were expecting. I do find that the RBA tends to, I guess, play down its hawkishness in these post-meeting statements. And as I said, some of these inflation trends have started to ease out a little bit. So perhaps traders are responding to that in the short term anyways.